have Mr. Varun Gupta, who is the CEO of Groww Mutual Fund, joining us on the show right now. A very good afternoon to you, Varun. Thank you so much for joining us on ET Now. And firstly, let me ask you, what is Groww Mutual Fund's thought process actually for launching its first ETF, and that too in the electric vehicle side? And firstly, congratulations on the first ETF launch as well.
Thank you so much, Sharon, and thank you so much for inviting me on the show. See, it has been we have completed the acquisition of the AMC we were acquiring about a year back. We launched our first one in October 2023. And since then, we have been launching for the we have been waiting for the right opportunity to launch our ETF. ETF, ETF has, historically, if you look at it, ETF has not been very popular in the retail investors in India. But with the current rise in demat accounts and a lot of people, a lot of investors getting comfortable with how to trade or how to buy and sell stocks, we believe ETF gives us an opportunity to all kinds of investors to basically participate in the market with ETF route as well. Just to simplify, many investors might not be aware with what ETF is. So ETF is basically is exactly like a mutual fund, but where it invests like a mutual fund where it invests in a basket of stocks. But more importantly, unlike mutual fund, these units are traded in the exchange. So at any point of time, you can buy and sell the units. Now, coming to why EV ETF. See, our aim as a fund house is always to give great investment opportunities to our investors, right? And EV, if you look at it in India, is at a very, very early stages, where the penetration is only 5% in electric two-wheelers. But this penetration was only 0.2% if you look at 4 years back, right? So in 2021, we were only registering only 23,000 electric two-wheelers in India. And now in last year in FY24, we have registered close to 1 million. So it's on a very rising growth path. We also have examples globally where this growth their similar growth has been seen. The 5% penetration equivalent to China currently is at about 30%, in US is 20% plus, and in some Scandinavian countries is 80% plus. In fact, India government target is to take this 5% to 30% by the year 2030. So in our point of view, EV and new age automotive gives a very strong decadal growth opportunity. And we have launched this ETF and FOF for our investors to get benefited out of this trend.
Like you mentioned, the way how the emphasis is coming in the EV sector as well as the government policies. If you could just highlight a bit more, what exactly has made you that positive on the sector? What sort of an initiative or the policies from the government that you've actually seen that is giving you more faith on the fact that the EV sector is here to grow and therefore EV should be part of one's portfolio?
Yeah, there are multiple government initiatives. They came out with FAME 1, which is the faster adoption of manufacturing of electric and hybrid vehicles in 2015. After that, it has been FAME 2, which has had more than 11,500 crore rupees of investment. And most recently, they have come up with electric mobility EMPS plan, right? Where they have simplified the electric ownership and also the custom duty, reduce the custom duty of electric vehicles. So there is very importantly, there is also PLI linked incentive, right? There is government has invested close to 44,000 crores in PLI, and most recently in the conversion from in the ACC, ACC electric vehicle manufacturing, ACC battery manufacturing. Right, so there is a lot of government initiative which has gone. We all know the GST on electric vehicle is lesser than the ICE vehicle. What it has resulted into, that with this subsidies, the total cost of ownership of electric vehicle over the course of next 4 to 5 years of ownership is significantly lesser than ICE vehicles, right? Internal combustion engine vehicles. And because of that, there is a huge demand in customers. So we see that this, sector or this EV industry has hit the triangle of growth, where the total cost of ownership is low. So there is a large customer demand. There is a strong focus by the government on the manufacturing of electric vehicles with the initiatives, with the incentives. So that is there. And the third is the charging infra, which basically curtails a lot of people from owning this vehicle, but that is also up and coming. So because of that, we believe that the overall growth in EV will continue to happen. Very importantly, I want to point out, because you were talking about government, there is in budget, there was a strong focus on employment, right? And employment via manufacturing. Now, auto industry contributes about 50% to the overall manufacturing, right? And so we believe there are some reports which suggest that EV, if it continues to grow on the way it is growing, standalone direct jobs, it will create close to 1 crore over a period of next 7 to 8 years, and indirectly it will create about 5 crore jobs. So that is why, overall we believe there is a lot of government push, and the triangle of growth is basically coming in this sector.
All right, so those are about the government initiatives, why you think that the EV sector will actually flourish. And also, very interestingly, you did point out the fact the emphasis in the budget on employment and how the manufacturing sector and the auto sector plays a really crucial part in this. But let me talk more about your ETF and FOF. Basically, if you could explain what the Nifty EV and the new age automotive indexes are, what's the difference between them, what will they consist, and also if you could, is there any data that you could tell us about the index, how has it performed historically when you compare it particularly with Nifty 50 index then?
Yeah, thank you so much. And this is a very interesting and very relevant question, right? See, this EV and new age automotive, because this is a completely new technology, right? And let me actually start with certain examples. See, whenever there is a new technology change which comes in the world, there's a lot of disruption. And at a company level, disruption can mean both positive and negative. Giving an example of lately what has happened, let's say in mobile phone, the way the mobile phones basically started becoming all smartphones, and there was a big disruption, right? So big companies like Nokia, which could not adapt to this change, and BlackBerry, they basically went completely downhill. But it led to rise of very new giants like Samsung started getting known for his smartphone, and so on and so forth. Many Chinese companies as well as Apple, etc. So that is where we believe when you are investing in a technology-based theme, then you should invest not in just some certain stocks, but in the entire value chain. So what this ETF does, what this index does particularly, it invests in the automobile manufacturer, or the OEMs as we call it. It also invests in the battery manufacturers. It invests in the battery component manufacturers. It invests in the raw material providers, the companies which provide raw material for this manufacturing, especially the chemical companies like Tata Chemical, etc. And also invest in the companies which are providing technology for these electric vehicles to basically start functioning well. Over and above all of this, there are some companies which are getting missed out because of their size. It invests in those smaller companies also, which are getting the PLI incentive from the government. Because of all of this, this overall index has become a full value chain. It invests in the overall EV and new age automotive sector in India. Very important thing is that this is the only index which I am aware of which gets rebalanced every 3 months. So if there is any new company which is which is coming up with its EV model, they can come into this index in 3 months. Right now, there is no pure play EV player because these are all incumbents. As soon as a new pure play EV player will come in the next rebalancing, it will also become a part of the index. So overall, it captures the entire gamut of the EV sector. Sharon, sorry, I missed your last question. If you can say that again, please.
Understand how the index has actually performed. If you have any historical
Yeah.
data, if you could tell us about how
So,
it's performed. Yeah.
yeah, sure. So see, index has been formed recently, but if you look at it, the last 1 year, 3 year, 5 year return, it has significantly, we compare it to Nifty 50. So it has been better performance than Nifty 50. Very importantly, when you talk about returns, you have to talk about risk adjusted returns, right? Because it depends on how much risk you have taken to, generate those kind of returns. And for that, we measure something called a Sharpe ratio. So the Sharpe ratio has been better off than Nifty 50. It has been higher. But again, I want to put a caveat here that past performance is not a guarantee of future performance. So if you want to invest in this fund, in this ETF, you have to consider that this is a thematic portfolio. This is not a pure diversified fund. So it should not form a part of your core portfolio. It should form a part of your satellite portfolio. And depending on your risk appetite and your conviction behind the sector, you can choose to allocate 5 to 10% of your, you can consult a financial advisor, read the scheme documents, and then choose to allot 5 to 10% of your overall investment portfolio.
Absolutely, and that caveat is very important actually, Varun. But let me actually come to the last question, and I want to understand some more in details that you would want to share with our viewers with regards to Groww, Nifty EV, and New Age Automotive ETF Fund of Fund, and also what should investors know, particularly when you talk about the NFO period or the process of investing for the scheme. Though you've actually mentioned very categorically of the companies that it forms, the way how you will have the rebalancing as well.
Yeah, so see, there are two ways in which the investors can invest. There is ETF and there is FOF. ETF, if you want to invest, the NFO is open till 2nd of August. you can, if you have a demat account, you can invest it via any of the broker, or you can invest via any of the financial advisors. They can also help you invest in the CTF. The second is Nifty EV FOF. That NFO is open till 7th of August. There, it's like any other mutual fund. It is available with all your financial advisors. It is available on all mutual fund platforms. You can invest via an SIP route or a direct lump sum route via any of the mutual fund intermediaries.
All right, then, Varun, thank you so much for joining us on the show on ET Now to talk about the first ETF that you'll have launched, as well as you've spoken about the FOF, and all the best for that, which is actually now open for subscription.